We're good? All right. I'm going to introduce our next speaker. Welcome back, everyone. I hope you made the most of what started off as 10 minutes and is now 15 minutes of networking. So let's jump right back into it with the session that's rewriting the rules around regulatory compliance. We all know that navigating compliance can feel like solving a never-ending puzzle. And I know being in product and dealing with our risk, legal, compliance, and everything else, it never ends. There's so many rules, there's so many reports, and there's so many regulations that come up every single day. But what if I told you that the days of compliance headaches are numbered? Our platinum sponsor, Fintech, is here to show us why navigating the regulatory landscape will soon be a thing of the past. Through digitization, API-driven solutions that Camilla mentioned earlier, and risk-based frameworks, compliance is going to become smarter, it's going to become faster, and it's definitely going to become more efficient, giving fintechs but also banks the freedom to innovate while staying fully compliant. And to take us through this game-changing transformation, we have none other than Camille Cadet, who is the founder and CEO of Fintech. Ladies and gentlemen, get ready for a power-packed keynote on the future of compliance. The stage is yours, Camille.
Thank you. I have a feeling we'll probably do some testing here and make sure everything is okay. But welcome, everyone. Welcome back. As I mentioned earlier during the panel, my name is Camille Cadet. I am the founder and CEO of Fintech. I got to this journey and helping central banks really having an appreciation for how important the central banking infrastructure is to the broader financial market. And when we started working with central banks, the idea of risk management, compliance itself for emerging technologies have been very difficult. And believe it or not, if you're an innovator in the room, the regulators are also struggling with emerging technologies and understanding how to protect consumers, and with their legal mandate of prudential supervision, how do they support innovation while also living up to their mandate? So we're a technology company. We bring modern technology to regulators, to central banks, but in a novel way, in a way that also streamlines and simplifies the central banking or regulator services, as you might call it. So whether it's licensing application, compliance reporting, monitoring, and risk management, we look at how can we use software and how can we build modern technology for regulators to help the broader ecosystem navigate the compliance requirements. So what I'm going to talk about today is really our approach to helping both regulators and the financial ecosystem, especially in the era of digital assets. When we think about what the risks are and what the opportunities are, they are changing. And the idea of having the broader technology for you as a regulator and being able to understand what are the risks, but also how do you deliver better regulatory framework for your ecosystem and make compliance easier for them. It's not usually the job of the regulator to make sure how you do your risk management today. You can see that the idea of putting regulation in place, putting regulatory frameworks in place, usually that starts with the regulator, but how does the compliance happen? Today, a lot of banks, fintechs are navigating how to do that in different ways, whether it's custom templates, really trying to figure out how to do the reporting, how do you demonstrate that you're compliant, is not particularly straightforward. So when we think about that, this is really an ecosystem problem. It's regulator is struggling with that, and the broader ecosystem is struggling with that as well. So although Keith looks very cool and composed, but regulators are struggling, right, with emerging, and when you think about technologies, but financial products in general, right, as they seek to welcome innovation while managing risks, But the new instruments that are coming up, you heard from SendB, for example, on how there are different products that are emerging, and therefore licensing requirement and compliance requirement can no longer be a one-size-fits-all. So regulators look like this behind closed doors, right? You don't usually see it, but it is also a struggle for them, which we're happy to partner with them on how to navigate. But it's also the financial regulators trying to navigate emerging and frequent compliance requirements. So when you think about the sandbox conversation that we had earlier, it is a space to learn, to understand what should be the licensing requirement, how should compliance be done, and what should be the risk metrics that financial innovators demonstrate and report to regulators. It's not only AML and KYC that's very, very important. However, now in digital assets, you're talking about liquidity management. You're talking about counterparty risk. You're talking about cross-border regulatory frameworks that might not all be harmonized, and consumer protection. So if you are in a digital asset space today, in a crypto space today, I'm sure you hear the stories every day of how anyone can wake up and have a computer and issue a new token, and people not knowing what the token is all about, but it sounds fun. And although you might say, this is usually, speculators that go there, that's absolutely true, but the broader adoption and the introduction of those financial products to the broader consumer group is a very risky bet. And how do they understand the risk? The financial literacy point that was made earlier, so important. But also a big question, right? Should everyone be crypto issuers? Should everyone be able to create financial products out of thin air? That's not how traditionally finance has been done. So there's a lot to really consider. And when we think about that, we think there's a new way. We think there's a better way of thinking about how to regulate, but also how to comply. So the new approach that we've been working on and being able to provide the ability for regulators to start digitizing regulation. What does that mean? The idea of coming up with policy, it's usually something that's done very much with a lot of research, data. Being able to roll that out sometimes requires a lot of collaboration, the ecosystem, the regulators that do that effectively see the benefit of that, engaging ecosystem, publishing early papers, getting feedback from the ecosystem, and understand how regulation can be applied. But once that's done, today, you usually have a PDF file that's published, posted on the website. There's a really beautiful web page that details the licensing requirements, and if you want to go to a licensing process, here's the process. And then once you become licensed, the regulatory requirements are usually given to you via email, via PDF file, and so on. So we took a different approach when we look at how can we think about the digitization of regulation. So digital requirements as far as regulatory requirements for fintechs, publishing that digitally, meaning having a platform embedding digital requirements and in a way that seamlessly can support digital compliance. And with that comes a lot of not only efficiencies, but also better visibility and better supervision and better risk monitoring along the way. So the platform that we built really thinks about not only traditional fintech, but also the era of digital assets. You really can't do supervision the way you do today in the era of digital assets. Things move a lot quicker. You're talking about a 24/7 financial market. It's not like when the bank shuts down, transactions are no longer happening, right? You have 24/7 finance now. How do you regulate and comply in real time? Can we actually do compliance by design? for digital assets? Can we do from sandbox to licensing requirements? Can we do that digitally and in a way that standardizes and streamlines compliance for service providers once they are licensed? So let's talk about, when we think about risk management, once you do those two things, being able to digitize regulatory requirements and compliance, here's how we think about it and how that solves for the risk management problem. So the what for us, I'll talk on the what and the how, but the what for us, digital regulation and compliance, on-chain and off-chain. That's very important because now digital assets are also living in a Web3 world, if you will, and on-chain, on different protocols, different digital networks. How do you provide digital regulation right there? For when the applications, when the transactions are happening, are they compliant by design? And off-chain as well. But also metrics, very, very important. We're doing a lot of work in helping regulators think about what are the compliance metrics that you really need to focus on. Instead of asking the regulated entity for everything and trying to find the risk, can we be more proactive and thinking about what are the risk requirements and how do you measure, what are the metrics that you need to have for each different service types? This is where you really kind of move away from one-size-fits-all regulation. It has been very difficult to support innovation while having a one-size-fits-all. Metrics and monitoring by service types is a way that we think can be very, very effective. And then, of course, dashboard for regulators and regulated entities as well, being able to monitor. When you think about risk management and you think about regulatory frameworks today, what the regulator is expecting is that the regulated entity will be able to see their risk. So they put the regulatory framework in place, they put the licensing framework in place. On a day-to-day basis, they expect the regulated entities to be able to manage their risk. But do they have the visibility on their risk, right? Can they actually take action effectively on that? So being able to monitor custom metrics, specific metrics on very specific service types kind of really gives you the right risk management profile for each service type. And of course, having digital asset requirements. Look, you can look at digital assets being used for payments, but I guarantee you there's a different component to it that with digital asset, payments, services can look very different. What are the requirements? What type of payment are you doing? Are you doing a fiat to digital asset? Are you doing a payment because you're buying another token? Are you using a crypto asset to buy a house? There are different ways of thinking about what the digital asset requirements might be based on the regulatory requirements. So I'm going to play, or they're going to play, a short video of how our platform, beyond supervision and beyond compliance, are two pieces of a puzzle to help risk management and supervisors digitize a regulation and as well as simplify compliance for the regulated entities. I think you can put the volume up. No volume? I can talk through it. All right, so what you're looking at here is Beyond Supervision, which is a software platform that we have for regulators to manage everything from publishing regulatory licensing requirements, being able to accept licensing applications, but for regulatory requirements, once they license an institution, being able to digitize the regulatory requirement that is then shared on Beyond Compliance, which is the compliance platform for the regulated entity. So if you could go back a little bit towards the beginning here. So pause here. And when you think about the regulatory requirements, so this is for Central Bank of Nigeria, we're doing a demo for them, but when you think about being able to publish the regulatory requirements, in a way that is embedded onto a platform, you can have many configuration of regulatory requirements. It doesn't have to be one size fits all. And think about how regulatory updates can be done from there. So as you're learning, and as you are getting new requirements, new players coming into the market, you might want to add and change capital requirements, KYC and AML requirements, consumer protection, third-party integration, and so on. Being able to do that digitally, we think is very powerful. Go ahead. Can play. Pause here. And when that happens, Beyond Compliance is the portal for the regulated entity, being able to track those requirements, not just through a checklist, but an actionable list of requirements. So how often, what is the compliance rule for that particular requirement? What is the metric that needs to be measured and reported? What are the thresholds for each metrics? Meaning if you need to keep at least 51% of a particular digital asset in custody or in reserve, being able to have that metric that can be reported in real time. And the thing about digital asset is a lot of the data can be found on chain and is arguably easier to report as well. That's where API integration, on-chain and off-chain integration comes in. And then when you have the standard templates, and the metrics that the regulator is expecting, being able to manage that on a platform, and you have a regulatory team, a compliance team, you can play here, being able to assign tasks and manage compliance throughout the whole organization, and the regulator is seeing that you're compliant, and you are managing your compliance much easier. Right? And being able to see where you are compliant, where you're not compliant, and being able to take action proactively. That is very, very important. And lastly, being able to submit your reports digitally to the regulator. So imagine having a platform and an infrastructure that digitizes not only the regulator's journey and providing regulatory requirements, and also having the regulated entities being able to meet compliance much easier. We think that's a very powerful way of approaching risk management, especially in the digital asset space. Thank you so much.
Breaking down how digitizing compliance is shaping the future of fintech, but you made it look so simple, and we look forward to it. So let's shift gears a little bit. I've got a panel that's getting mic'd up at the back there, and dive into a topic that keeps every digital leader up at night. So how to drive digital transformation without breaking the bank, literally. Right? We all want innovation, we all want speed, and we all want agility. But at what cost do we want it? How do we modernize legacy systems? Some of you call them the spaghetti. How do we stay ahead of cybersecurity? And how do you then foster these partnerships with these fintech, someone called them barbarians at the gate, and still drive financial inclusion while still keeping with the CFO happy in terms of cost? It's a strategic balancing act, and today we have a power panel of digital leaders who are making it happen. Guiding this crucial conversation is our incredible moderator, Danielle Dutois, as some of you might know, who is the COO of the Fintech Association of South Africa, FINASA. She will be moderating for us. And joining her on stage is Awelani, who is the head of Department of Fintech at FSCA. We've also got Brian Mahlangu, who is the VP of Product, specifically mobile, at CIB at Absa Group. And we've got none other than Akona Bashe, who's the lead strategic partnership and new capability development at Liberty Group South Africa. Looking forward to this panel. Guys, give me a nod. Are you ready? I'm seeing this almost 5 seconds ready. All right, cool. They're setting up. Guys, I need 4 chairs only. And make sure the damp one is not on stage. Yes. There is a damp seat. I don't want my panelists to be upset. Just make sure it's not on stage, please. Right, come up, guys. If you're mic'd up, do make your way on stage.
Oof, the chair is quite...
Hello, everybody.
No, it's not. It's just a bit...
Sorry that took so long. Apparently, I'm wearing a lot of makeup, so it doesn't stick. So, thank you for the introduction. It saves me some time. It means that I don't have to introduce everyone myself. But let's be honest, real quick. There is consistent pressure pretty much on everyone in this room, panelists included, okay, to innovate, modernize, stay competitive, digitize. How many of you have heard these words floating around your meetings? I'm seeing quite a few hands. All right, now the problem is that all of this needs to be done whilst you are being cost efficient, okay? You're often called in and go, okay, digitally transform, but please don't break the bank. And you sit there and you go, okay, that's going to be relatively tricky, but I'm no expert, which is why we have these lovely people here today. They're the experts, and they're going to explain pretty much how to digitally transform whilst still saving the business costs. Now, let's kick right into it because we have a lot of questions to get through here. I think we're going to break this into sections. Let's start with legacy systems versus digital agility. All right. So let's get a sense from the entire panel really quickly, everybody, your thoughts on what is more dangerous, moving too fast and breaking things, or moving too slow and getting left behind. Let's start over here. After you.
Oh, me. Okay. No, good afternoon once more, and thank you very much for this opportunity to come and share our thoughts around these thought-provoking topics. I will approach this from a regulator perspective. As you know, I'm a regulator. My job is to make sure that there is stability in the market and consumers are protected. So from our approach as a regulator, we do support digitization, but we do believe it should be done responsibly. By responsible, we mean we should always make sure that we balance the risks, as well as at the same time make sure that we promote innovation. So that's always been our approach, and that's always been our stance. So I can't say the best way is move fast and break things or move slow. I would say from a regulator perspective, it's a question of being cautious in terms of we always try to make sure that we balance. That's what we do as a regulator. So our approach will always differ from the industry. So we will always make sure that we balance that. And we also always make sure that we continuously monitor the space to make sure that if there are any risks that we feel like they are emanating as a result of what is happening in the market, we are able to respond quickly. Over and above that, by continuously monitoring, we also be in a position where we are proactive in terms of coming up with laws, statutes, guidelines to make sure that our landscape is secure. So I might be speaking in the high level and more general. It's because of the chair that I'm sitting in. I'm sitting as a regulator.
Sure,
Yes.
that makes sense.
Yes.
Brian, what do you think?
I think the first thing is for us to first define legacy systems as well as digital agility before we can actually answer the question, right? When it comes to your legacy systems, it's more your old technology. When it comes to your digital agility, it's more your newer technology, which are much more flexible. So when you ask the question, when can we run fast, it's mainly to say, what are we running fast towards to, right? Before we can actually make a decision.
Yeah, what's the goal?
And what's the goal? 100%, you know? And if you look at our current constraints, there are untapped markets that require faster technology for us to actually unblock those opportunities at this stage. So it really depends, as we've just articulated at this stage.
Makes sense.
Yeah.
Akona, what's your thoughts?
I mean, I think it's the story of Goldilocks and the Three Bears, right? The one chair was too hard. The other, no, it was a bed. The one bed was too hard, the other bed was too soft, and the other bed was just right. And I think ultimately we need to view digitization as an ecosystem. So there's not just a single player in this ecosystem, there's multiple players in order to make this ecosystem work. So someone like me who's from business, I would say rather go fast. You don't want to miss out on opportunity. You want to be first to market. You want to be the one who's solving needs. However, you know, there are so many nuances when it comes to digitization, especially from an ethical perspective, looking at things like regulation, which I'm not going to go into because I'm not an expert in that. All I know is that that's the brake that stops me from doing what I need to do. However, I would also say, yeah, just to, you know, balance out the ecosystem, respecting all the players in the ecosystem, it's really just, yeah, a balance of both.
Yeah.
I think this brings me to a follow-up, Brian, specifically aimed at you here. The question that majority of fintech companies would most likely ask a bank is, how do you plan on achieving digital agility if there is still such a massive focus on legacy systems? Okay, and I think it's a fairly fair question to ask. What would your answer be to that?
When you look at your legacy system, they very much make the day-to-day operations much more efficient. From a culture perspective, a lot of people have adapted to them, very much comfortable. But there are a level of risk associated with it, right? If you look at some of the risk of downtime, you know, imagine going to a branch and the systems are offline. It does really impact businesses in terms of, you know, operating and actually providing efficiency in providing their services, you know. So when it comes to us considering some of our fintechs within our space, it's quite more important because they offer that flexibility that we need. I always make an example of, you know, if I'm going to a shop with my grandfather and it's closing at 5 and we have like 5 minutes to get there, I'm more flexible to actually run faster to get there. But he's more slower to actually get there, but he does have the IP in terms of what we need when we get there. So how then do we bridge that gap? That's when fintechs play an amazing role to say, yes, Brian, run faster. When you get there, pick up the phone and call me. And the telephone is now the middleware that is used to actually bridge that gap. I say, I'm here. What do you need? While he's walking slower to get to the shop, I've already made it there. So it's quite important for us to consider the partnership between traditional banks as well as fintechs in terms of then how do we bridge some of these constraints that we see in the market at this stage.
So Awalani, that brings me to you actually. So we're starting to talk now about fintech partnerships. Okay,
Yes.
Cool, fine. So what about, I mean, in your role, you're balancing the whole fintech boom with regulatory framework.
Yes.
All right. So let's talk about regulatory compliance.
Correct.
All right. Is this a deal breaker when you're dealing with a legacy organization like a bank
Yes.
versus someone new, innovative, completely digital like a fintech? Is it a deal breaker, regulatory frameworks, or how can it actually be an innovation driver to forming those partnerships?
Sure. So I think from our observation and from what we are seeing as we interact with the market, what we are seeing is that fintechs, especially fintechs, most of them, they tend not to be familiar with what's happening in the regulatory space. They've got this new innovative and interesting product, but they don't understand the regulations. Whereas when you look at your traditional incumbent, they're already regulated, they are familiar with regulations, they know what to do.
Yeah.
So when the two comes together and they partner, I think there's a synergy that come out of it, in a sense of Now, the fintech that doesn't know regulation is in a position whereby now, whatever product and services which they will be able to deploy in the market as a result of this partnership, they are able to comply with existing statutes and rules. I think that's what we are actually observing, is that though fintech, they've got this new offering, new interesting ideas, this new product, they don't know regulations, but the incumbent knows. But once they come together, there's that synergy. And the good thing is, once they started understanding regulation, it means whatever they are offering the consumers are protected, which is quite important to us as regulator. Once the consumers are protected, there is trust in the financial system. Once there is trust in the financial system, it means now there's also stability, which is what you want in the financial system. You don't want a financial system which have these very interesting, innovative products, but at the end of the day, they are not compliant, and consumers are at the mercy of whoever is offering this product. So, that's how we are seeing this. So, to me, yes, it's a deal breaker. So, we compliance is a key issue. Once we get compliance right, whatever innovation that comes, and then it operating within the perimeters of good compliance, then it makes our market to be stable, to be safer, and to be trusted.
Yeah, that's a really, really good point. I think, Akona, from your perspective, and you're leading strategic partnerships here, so this would be something that you probably answer every day. So we've heard now from the regulator, that regulators as a whole have an idea of what the secret sauce is in order to make this, my CEO is going to kill me, but fintegration, because it's just no other word for it, successful. From your side, so from the private sector side, what is that secret sauce that can enable a fintech bank partnership a lot easier, provided obviously we're staying within the compliance frameworks that the regulator have provided?
Yeah, I mean, I think that's a great question. I mean, I think some of the challenges that we have, because I actually work in a very kind of like proof of concept, experimentation, pilot type of environment. What we try and do at Liberty is, before we fully integrate a partner, we want the thinking is to really just like test it out to see whether this is something that's sustainable and that's mutually beneficial for both, you know, the fintech as well as the organization. And I mean, my learnings, I mean, I've been burnt, and with me being burnt, fintechs have also been burnt. And really, I think there needs to be a mutual understanding as to what needs to be achieved. And I know it seems like something that is so basic, but I think with fintechs, remember, they are smaller scale, they are hustlers, they are trying out, they don't have deep pockets. So they just want to get into a partnership. And a lot of the time, the metrics are very poorly articulated. What we're trying to achieve is very poorly articulated. And it's only once this partnership is in place, you realize, oh, you need to figure out the fintechs, but that's halfway through the POC. And then you're pretty much just running around doing things that are pretty much half-baked, that haven't been well thought through. So I think that's the one thing. And then the second thing, from a piloting environment that really concerns me in the work that I do, is that a lot of the time you pilot and you POC, and it doesn't work out, right? We're like, okay, cheers, guys, this didn't work. We didn't articulate the metrics properly, so, you know, we need to go back to the drawing board. What about the fintech? You know, now we've paid them for 6 months, and then now, you know, it's back to the drawing board. So I really think I spoke about an ecosystem before, and really just respecting all the players in the ecosystem and ensuring that when you're articulating what needs to be solved, you're not only speaking from your perspective, and that mutually, right, you understand what you're trying to achieve, we understand what the fintech is trying to achieve, and we collaboratively try and achieve those aspects together. I feel like a lot of the time we're working very much in isolation, and pretty much things don't get solved. Like, we don't get the fintech partnership that we're looking for. They don't get the, you know, the distribution channels, because we were selfish in what it is that we're trying to achieve.
Yeah, I think you make a really, really good point on that. And I want to move now on to what a lot of people will assume is a buzzword. Okay, so you have a few. You have AI, you have ChatGPT, and then you have financial inclusion. These are buzzwords that are used amongst businesses, banks, and fintechs a lot lately. And I have some incredible, I want to say, colleagues and friends in the audience that are in marketing specifically. And I imagine that creating an environment where your business is the forefront of something like financial inclusion costs a lot of money. So, Akona, I'm going to leave you to last on the financial inclusion topic because I know you have some things that you want to say specifically. But Brian, talk to me about this. Digital transformation, financial inclusion. Is this a buzzword? Are people treating it as seriously as they should from the banking perspective, from the fintech perspective? Or is it actually a core business strategy that is actually dominating the boardrooms in the way that it should? What's your thought on that?
Yeah, I must say, if we look at the current market, right, when we look at the unbanked population, we are currently sitting at about 6 million people in South Africa unbanked at this stage. If you look at the underbanked market, we are currently looking at about 10 million people in South Africa at this stage. So we have a total of about 16 million people who are underserved at this stage, right? And I don't think it's a buzzword. Let's look at an example of Capitec Bank. Capitec Bank is currently at about 20 plus million customers serving that specific market, which is underbanked at this stage. So there is a need for us to actually do some financial inclusion specifically in this market, which has, 16 still million people at this stage. So it's quite important for us to actually factor in these financial barriers. And one of the things that I've seen as a strategy that has been used is mobile money at this stage. Because we understand the current layer of the land, let's look at the numbers. 33% unemployment rate in South Africa, that's a big number. What does that mean? It means people are not having as much access to finances as would like to be at this stage, right? What is the best way to actually transmit money into those people? Mobile money is the best option for us to consider that. And when we do build for such solutions, what is the best way to consider it? Is USSD wallets the best way? When FNB came into the market with the e-wallet, it was such a huge relief specifically to the unbanked and underserved market in South Africa. So there is a market opportunity to reach more clients, and I think we haven't, but we haven't fully, captured that market at this stage.
Awelani, from the regulator's perspective,
Yes.
talk to me about financial inclusion, talk to me about digital transformation. I was at a few conferences where one of the key topics was, is this a new solution that is going to financially include? Or might it be a hindrance if people out there are not financially literate enough to understand how to use digital means? What's the regulator's view on that?
So it's a combination. Maybe for me also to highlight that financial inclusion to us as a FSCA is one of most important strategic objectives that we strive to achieve on a regular basis. And we are very much aware of the fact that in South Africa at the moment, though we boost the fact that we've got over 80% of our population that is currently banked. But in terms of financial inclusion, if you look at the definition of financial inclusion, which include access, usage, and quality, it's still very poor. And there are a lot of factors that are actually driving that. You've got issues of infrastructure, where you find that, in some community, especially most rural communities, the infrastructure is still very much poor in terms of them being able to have access. And the other things that we are also seeing is the fact that, yes, people are banked, but the products that are out there, you find that they are not designed to meet their specific needs. They actually meet the needs of a certain segment of the population. Right. Whereas, people in the rurals, all of that, we are not meeting their needs. you also have to look at the issue of the ecosystem in which most of the so-called people who are excluded are operating. You find that the products that, yes, we've got innovative and wonderful products, but those products in that ecosystem, they can't function. I mean, someone who stay in a township or in a village, you find that they need cash because for them to do their nails or their hair at a particular salon, it's cash.
Yeah, they only accept cash.
Yeah, they only accept cash. For them to buy fruits on the streets, the vendor there can only take cash.
Yeah.
So there are no those products that meet their specific needs. The products that are there, they are able to meet the needs of people who are in urban areas.
Who are not in the rural areas.
Exactly.
Yeah.
So I think there's still a lot of work that needs to be done. Yes, there's digitization that is happening, which we believe somehow it's making an impact. We are starting to see a trickle in of some products in the rural communities that enable people to go digital, but we still believe a lot still need to be done. And hence, as a FSCA, there are initiatives that we are supporting, some of them that are being driven by the World Bank to make sure that we drive digitization at the end, leading to more financial inclusion. So, and also in terms of policies, there are initiatives that we are driving. Kitty was speaking about the sandbox. We're talking about a sandbox. There are solutions that we are encouraging or promoting within our sandbox that should they be successful and go out there, we believe they're going to play a huge role in terms of driving financial inclusion in South Africa. So all in all, this is something that is key and very important to us, but there's still a lot of work that needs to be done.
Yeah.
With these innovations that we have, a lot still need to be done.
Yeah, I think that's really good point. It's not going to happen overnight, is it? Akona, the big question here, and I direct it to you. So we all agree that financial inclusion is necessary.
Yep.
We all agree that there is still a long road ahead of us. But as a business, number one, what is a business's true definition of what financial inclusion is? Because I know there are two different definitions for the term financial literacy. One is, can you figure out how to budget? And the other one is, do you know how to actually use the tools that are available to you? Okay, so there are two different definitions. So my first question is, what would you define financial inclusion as it is, as what Brian specifically was talking about now, and as the regulator obviously has in their map for the future? And secondly, can this actually be profitable for a business, or is this just something that you have to do, almost like regulatory lip service, if that makes sense?
Thanks, Danielle. So, I'm going to answer the questions in reverse. I'll start with the first one, but it will take me a long time to get to the answer, and then I'll define financial inclusion. So, the issue with financial inclusion for me, it's something that I flip-flop around over the months, over the years. I mean, if you had asked me this question in November, I would have had definite solutions as to how financial inclusion can be implemented. But, this week in preparation, I was just back to the drawing board, and I was back to pretty much just asking questions. So, I'm going to touch on two things. I'm going to touch on customer centricity, but I'll also touch on a broken system, right? And starting with the broken system, okay. Now, from a financial inclusion perspective, right, we're looking at a vulnerable market, okay? So the lower income, they are what I'm going to term vulnerable. Anything from, let's say, SASSA grants to 22,000. And we may ask ourselves, hang on, 22,000 is a lot of money for some people. However, you really need to contextualize their living situations. A lot of these people that are earning 22,000 have got like 12 people that they've got to look after, and they've got all of these dependents, which obviously diminishes their disposable income. So I'm just going to look at that group. And I'm going to give a couple of examples. The one example is that one thing that they're very dependent on in order to get around is public transport. And a lot of them use taxis, right? Now, when the petrol price increases, right, for middle market to upper market people, we feel a constraint. But then sometimes there's a bit of a reprieve. Then sometimes it goes up, constraint, then there's a reprieve. Granted, there is a trajectory going this way, but we do have ups and downs and ups and downs and ups and downs. However, this market, when the petrol price goes up, the taxis increase the transport costs. But when the petrol price goes down, they don't do that. So then that inflation gets built into the cost price, and that inflation becomes a profit to the taxi driver. One. We look at retail as well, right? If there's, I don't know, a potato shortage that's happening, or a wheat shortage that's happening, bread is going to go up, cake flour is going to go up, everything is going to go up, but when there's some sort of regulation, it doesn't come down, right? And that inflation, once again, gets built into the price of retail products. And this vulnerable market, they cannot escape this, right? And ultimately, I think what I'm trying to say with the broken system, right? And I don't know how to say this nicely, but I will say it as it is. When we get them in financial services, they're not in the best shape. They're not in the best shape. And so there's kind of like the journey that they've gone through. Now they want to come to financial services, and they're not really in tip-top condition to be offered, I don't want to say financial services, but financial services the way corporate knows how to offer financial services, which is in a profitable way. So that's number one, right? Number two, I think from a customer centricity perspective, right, and it really speaks to how corporates, and I'm speaking about corporates now, have been structured to profitize off people, okay? How then do you profitize off of someone who is functioning on a deficit, number one? And number two, I think with the vulnerable people, or the vulnerable part of the vulnerable demographic, you look at the type of roles that they have, right? They've got contractual roles. They'll have jobs for like 3 months at a time, then they'll be unemployed. Then they'll have another job, then they'll be unemployed. So the way that companies have been structured doesn't fit that in. We're going to almost like rate them, and then we'll say, no, this is unbankable, or this person's unbankable, we can't solve for them. And also something, and I'm just adding this, that really, really broke my heart was when I realized that the lady who comes to my house to clean it up, she actually spends more money on transport coming to me and going back home than I spent going to Liberty and coming back home. And that just broke my heart completely. And ultimately, I think what I'm trying to say is that the system is broken. And once yes, there's a lot we can do. There's definitely a lot we can do, and I'm going to move on to that. But once we get this vulnerable demographic, they're already broken, financially broken. From a customer centricity perspective, I'm going to speak about a retailer that's in Kwakwa, right? I mean, Kwakwa is an area, it's a rural area. It's got like a couple of people within the community, and there's this one shop that has a turnover of 2 billion rand a year in Kwakwa. And you ask yourself, okay, Kwakwa is a low kind of like income place. How does one retailer make so much money? And it really is because this retailer understands the community of Kwakwa. So like they understand that people in Kwakwa, for example, they believe in tokoloshes, right? And they will sell something that is culturally appropriate to this market, right? And that is how they are making money. They're not bringing in things that are not culturally appropriate to this market. They understand the market. They're selling sea salt. They're selling traditional medicine. They're selling et cetera, elements that speak to the market. Now, how do we take that and apply it to financial services? This market is very cash heavy, right? This market relies on public transport. Informal sector for a lot of the, services and goods that they consume, and also stokvels. Why are we not speaking to what is relevant to them? Why are we trying to copy-paste something that has worked for a different segment into the segment from a customer centricity perspective? So I think all in all, Danielle, to answer your question, financial inclusion is really understanding and respecting the customers that you're serving, right? Really ensuring that you are tailoring solutions that speak to them, what they believe in culturally, their values, their affordability, the systems that they kind of like navigate in. You really need to understand that in order to build a solution that is desirable, feasible, and viable to them.
I think that's a really great definition. Yeah, same. I know we have 5 minutes, as far as I know, so I can talk about this forever, but I'd like to get some questions from the audience to our esteemed panelists and see if anyone has anything that they particularly would like answered related to the topic at hand.
I can hear you. Oh, they probably can't. Can we get her a mic?
Here it
please?
comes. There's a...
Okay, thank you. So I just want to ask a quick question with regards to investors. So we know in the ecosystem there's a lot of investors as far as fintech goes, right? And current solutions are catered for the elites and urban, and that I think we have already figured out that there's a lot of research around that. But are investors willing to invest in our underserved and unserved markets? Are there investors that are really willing to invest in those type of solutions? Because I think sometimes fintech companies do have these ideas, but then they also need the support from funders, angel funders, and many other people that support that capability. But who's going to support me when I'm at Limpopo in a rural village in Hachweni, for example? Thank you.
I think that's a great question. Brian, do you want to take that one?
Oh, that's a very good question, I must say. I think there are 3 strategies I've seen in the market. The first strategy is API. Secondly, it's cloud. Thirdly, it's partnership. This is how your fintechs and traditional banks get to collaborate, right? Before there's collaboration, we need to understand, is there a market that needs to be served, right? And as a fintech, I might say, I have, let's say, for example, a spaza shop, and with that spaza shop, I want to buy some scooters that can actually deliver groceries in the township, right? And for me to actually get to that state, I'm going to need some investment. Firstly, we always need to assess the size of the market. As an investor, I need to understand, hey, am I going to make money here? Because that's the purpose of investing ultimately, right? And based on the 3 strategies that I've mentioned, how can we integrate with bigger financial institutes to help us get some more data to increase some, how do you call it, compatibility? Because remember, before we invest, there is some sort of client reach that we need to get to, as well as some compatibility. So to answer your question, you're 100% right. We need to understand what's the size of the market that you're trying to solve for before we can actually put money in. And most of the time, that's what small companies are failing to put forward, as Akona mentioned. If the metrics are not right at first hand, and we try and do something, and then 6 months later, it's not working, who do we blame at the end of the day? So we need to get better at actually shaping ourselves better for success before we can put money into success, I guess.
Hi, I just thought we'd come back to the digital transformation side. And we look at established FSPs who are looking at digital transformation strategies, may look at a product, and it may be a great idea, pitch that to the business, it starts to get built, there's quite a few examples of this, I'm not going to mention any names, and then it gets canned. Right? It gets canned because it doesn't contribute enough to the balance sheet, to the P&L of this business, and they just go, you know what, let's just stick to the traditional because that's more profitable. What do you think the challenge, or what do you think the solution is around that? I mean, difficult, I appreciate we're not not all necessarily bankers here, but how does one overcome that?
Should I?
Yeah, go ahead, Akona.
Look, I mean, I think it really goes back to what I was, speaking of. Okay, so it really goes back to what I was speaking about before, about really just ensuring that you're very much aligned in what it is that you're trying to achieve. And I think for me, it's difficult to, I can speak on this, but it's difficult for me to speak on it because we're not practicing it in our organization, but agility, right? And that notion of before something breaks, or when you notice that something is wrong, really through the feedback loop, really just like iterating and fixing as quickly as possible, right? I think that is something that could minimize the damage that could be done to very much at the end. But I think what we do when we do pilots is that, and I'm going to speak from my experience, is that we do a lot of work in the beginning, and then really during the pilot we're just focusing on reporting, but not focusing on refining and rebuilding and iterating and learning and filtering those in. And that's also because we don't have the resource capacity to do so in an agile way, because we have to prioritize projects. So then if you want to prioritize it, it goes to the back of the queue. And so basically, I think to fix this, we need to have processes in corporates, right? Because the fintechs are relying on the corporates that are a lot more agile than they are, because it really does become difficult to fix bugs or to fix, instances in my kind of like line of work, because once I do report something on the train, I'm told, oh no, PI planning is only in April, and well, you're number 8 on the priority list. But guess what? I'm running a 6-month pilot. 3 months' time will be like, month 4 of my pilot, which doesn't give me much room to fix and iterate. So the systems, I'm going to speak about my organization, are not conducive to agile practice. And I think that's what we need to fix in order to really become more partner integration friendly. That's my view.
Ladies and gentlemen, we are out of time, so I'm going to hand back over to Chipo. If you have any other questions, I'm sure our panelists will be around and you can ask them. Thank you, lady and gentlemen. I really enjoyed chatting to you today.
Thank you so much.
Thank
you so much.
Thank you, guys. Yes, for all the questions that have not been answered, please catch our panelists over lunch or throughout the rest of the day. Guys, please get your goodies to my right. Once you drop the mics there, you can get your goodies. Or maybe you can just take it to them at the sound desk so that they can get it. So I'm going to move into the next session. So let's turn the momentum up with this next session. What if I told you could get 300% ROI? That's literally what we're going to talk about. Sounds too good to be true? Well, Huawei is here to show us exactly how it is done. With cutting-edge cloud technology and their powerful digital engine, they're helping businesses scale, they're helping them optimize, and most importantly, maximize efficiency, all while driving serious returns. And we all know we need that. So I'm going to invite Calvin Young, Head of Solution Architecture at Huawei Cloud South Africa, to come and take us on. Calvin, are you ready for us? He's ready. He's getting mic'd up. Presentation is up. We're getting fitter and better at this thing. Well done, guys. Almost. Right, Calvin is here. Thank you.
Okay, good morning, everyone. My name is Kelvin Huang. I'm the head of solution architect of Huawei Cloud South Africa. And I have been working in fintech and cloud technology for many years. And I also have seen the cloud technology reshaping the industry very much. And looking globally, we can see China as a shining example of fintech success. And the company like Ant Group and WeChat Pay have built a large ecosystem in fintech in China. So every time I'm back to China, when I want to bring my bank card to make the payment, but other people just scan their face or scan their hands to make the payment. And I was feeling, did I enter the wrong world? So comparing between the China and Africa, these two markets, actually the market characteristic is very similar. Large population and have the same urgency to build an inclusive financial system. So today, I will stand for Huawei Cloud and sharing how Huawei Cloud digital engine helping the company unlocking 300% of ROI, and then how we can replicate these successful cases right here in Africa. Okay. So Huawei, as a global leading cloud technology vendor, we have a lot of successful cases globally across different institutes, across different companies, and across different industries. Looking globally, the international company like ICBC, DBS, and local companies like M-Pesa, OPay, Ozal, and FNB has chosen Huawei Cloud as the trusted technology partner. And we're also ranking #1 in both China for cloud infrastructure and also the dedicated self-built financial dedicated cloud infrastructure in China. So our strong position allows us to customize every single solution for our customer globally for special demand, and also can make sure we can reach the highest standard of the industry. And to make sure we can keep up to meeting the requirement of the fintech, it's always growing demand and always changing regulation. So the fintech industry needs a robust, agile, and innovation solution to make sure they can keep innovate and scale seamlessly. So first one, as the fintech customers scale and diversify, they need to have a flexibility to deploy their workload in a different cloud environment. For example, they want to choose the public cloud, they want to choose the private cloud, they want to choose the hybrid cloud according to their different purpose. And Huawei Cloud have this kind of flexibility to allow them to deploy and managing their workload in the right cloud environment. And second is about the agile transaction. We know in the world of financial services, every second counts. So with real-time transaction like mobile transfer, the user needs a seamless, frictionless user experience. And our infrastructure can ensure this kind of capability without compromise any secure performance. And third one, it's about quick time launch to the market. So no matter you are launching a digital loan or digital wallet business, how to rapidly development and deployment your product go to the market is critical. So we also have a bunch of development tools can help you to speed up this process, shorten the time from the concept to the product. And lastly, it's about the new business, such as using the blockchain, this kind of technology enable your business. We also got the blockchain as a service to provide as a technology component to your business. And this technology have shown it can help you to increase your transparency, increase the security, and also lower down the cost, maybe during the transaction verification. So what we can provide. And this page is showing it's the principle of how we divide our cloud. The core offering of our cloud is the resilience infrastructure. So all of the infrastructure we design is to make sure no matter you are dealing with the high peak transaction or manage your compliance regulation across different regions. So this is our differentiate. We can provide different kind of cloud. Later, I will share you what flavor. We can ranging from public to private and hybrid and edge cloud. And in the agile digital core, we also got a bunch of service can support your business. For example, we have Code Arts. This is tools that can help enable our developer to fasten the development and deployment process. We also got CCE and CCI, this kind of container service, help you running your container in a flexible management way. And we also goes beyond just infrastructure. We have our model arts, these AI services combined with DeepSeek, running the model in our cloud. And we also got DWS data warehouse service to give the shareholder a data-driven insight. All the customers that adopt Huawei Cloud has proven that they can shorten the time from the concept to the market, shorten it from the months to days. And every customer that adopt our cloud have proven they always stay ahead of the competition. So let's talk about the cloud flavor we provide to the market. Firstly, public cloud. We have investing more than 33 regions and more than 93 available zones globally. 3 of them currently is sitting in Johannesburg. And in our public cloud data center, we can provide a dedicated, isolated area for hosting your equipment. That is our what we call dedicated hosting solution. We also can provide a fully on-prem private cloud solution that deploy our whole cloud in your data center, but with the same experience with public cloud. That is our Huawei Cloud Stack. Lastly, we also have CloudPunk, this kind of edge cloud solution, which can extend the public cloud service in your own data center. And as I said, Huawei Cloud is the only cloud vendor can provide from public cloud, private cloud, hybrid cloud, and edge cloud to meet different requirements of the customer. And in the next, I want to talk about the professional and efficiency. We always leverage our expertise to helping customers to optimize their application architecture and business performance. Ranging from development, deployment, and to maintenance. Each single step, we have the cloud-native services to support your business. I will give you an example. So we successfully support the largest Fintech company in Nigeria, OPay, to reach the daily active user to reach 10 million. We also successfully support the largest bank in Thailand, SCB, to launch a new digital core system and then help them to increase 250,000 of users in 6 months. We're also helping the largest digital bank in Singapore, Greenland Digital Bank, to roll out a totally new digital bank system within 11 months. So this is what I said about professional and efficiency. In the next, I want to talk about the accuracy. ICBC is the largest banking company in the world, and they have more than 1 billion of users globally, and also known as the shareholder of Standard Bank. Huawei Cloud built a solid cloud-native foundation system for ICBC Intelligent Risk Control System together. By adopting our graphic engine services and our cloud search services, we help them to build a very high performance, high accuracy, intelligent risk control system for the small loan system. So we help them successfully launch this business, and then currently all the users can upload the personal material and also verify their biometric information all through the mobile app. And in this case, what's the outcome is we help them to increase the decision-making efficiency in the credit service, increasing 70%. And then we also help them to decrease the fraud rate down to 10%, as well as low down the labor and anti-fraud rates down to 30%. In the next, I want to talk about a story about trust and growing bigger together. OPay is the largest and most successful company in Nigeria. And they are founding in 2018. Until last year, 2024, the total user of OPay, this platform, reaching 60 million. Is almost larger than the population of South Africa. And before OPay migrate to Huawei Cloud, they are hosting in another cloud vendor in London's region. And due to the long distance, the access latency is very bad. And because during the pandemic, all the bank is shut down. So everyone go to register OPay. So the application performance, the database performance is very, very poor. So our team working together, helping the OPay migrate all the workload to our local region. And also we're using MRS, MapReduce service, and also CSS, Cloud Search Service, to help them to optimize the big data architecture. So after working together with OPay's engineer team for 6 months, we successfully lower down the access latency down to 80 milliseconds. And we're also helping them to increase the daily transaction from 2022, 4 million, increased to 2024, 100 million. This is the performance of their business. So almost 25 times. And in the next, I want to talk about a story about Super App. Super App is a very convenient function and what makes the fintech company very popular. And KBZ Pay is a leading mobile payment company, and they want to launch a super app platform all in one with various of functions. But the challenge is they not only need to launch a lot of functions, but also need to face the challenge how to integrate with the current system and provide a seamless user experience. So Huawei Cloud will provide a local development tools called AppCube. And these two can allow the developer to drag and drop, copy and paste to make sure the development and accelerate the process of development. And we also help them to launch a approval process, standardize the process, and also make sure the mini program release under the proper quality assessment. As a result, the rollout time of a mini program in the app shortened to 7 days, which is 3 times faster than before. And we also recognize the successful of fintech is not only just provide a cloud technology. That's why we build a large and comprehensive ecosystem with our industry ISV partner. In the core area of financial services, we are working together with Anytech, Sunlight, HSG, Terminus to provide a core banking system and digital wallet and other critical financial systems. And also we work together with many emerging fintech companies like Wallet, Trust Decision to provide the smart decision making and smart risk control, this kind of system. And as I said, we are not just a cloud infrastructure provider. We are a committed technology provider for this industry. And when we look at the future of fintech in Africa, one thing is very clear, is the digital economy is here and is reshaping the financial landscape. So we want to working together with you guys and boosting the digital economy in Africa and to build a more inclusive, more sustainable future for all of you guys. Thank you very much.
Right on time. Thank you so much, Calvin. You're right on time. You're saving us. So I'm going to plunge us into the next session because I am racing towards lunch. and I'm sure a couple of you would want to get some food into your system. But we're going to invite Brian Mahlangu to come back on stage, and he's going to chat to us about Africa's mobile revolution. And it's not just about technology, but it's really about bridging gaps, breaking barriers, and banking the unbanked. So from mobile money to strategic partnerships, we are witnessing a new era where a simple mobile device can unlock limitless opportunities. Brian, I'm assuming you're good and ready to go. And then I'm going to ask my tech team to make sure that we mic up the next panel that's going to come up just before lunch, before I come here on stage. Brian, the stage is yours.
All right. Good afternoon, everybody. I'm sure you're tired of seeing me again. But what I would like to do before I start, I'd like to just do a quick exercise with everyone, right? And I do promise if half of the room gets to sit down by the end of the exercise, I'm going to be buying drinks for everyone. Please hold me accountable to that. So let's do this. Can everybody just stand up? And I'm going to just ask 3 questions. And if half of the room gets to sit down, like I promised, I'm buying drinks later today, right? Cool. The first question is, if you've had a mobile device for more than 5 years, please remain standing. If you haven't had a mobile device for the past 5 years, gladly you can take a sit down. All right, 2 more questions. Did you understand the question, right? All right. Cool. The second question is, if you've had a mobile device for more than 10 years, please remain standing. All right, all right. This is going to be a tricky one that I'm going to ask lastly. If you've had a mobile device for more than 20 years, please remain standing. All right. No cheating, guys. No cheating. 20 years. Let's think about it. 20 years. It wasn't a long time ago, 20 years. Yeah. All right. Thank you so much for participating. It means I'm not buying drinks later on, right? Yes. We can gladly sit down, everyone. Let's sit down. And the reason why I am asking this question is because the current reality in Africa doesn't reflect what I've just, what we've just displayed as part of the room. If you check currently in Africa as a continent, half the continent doesn't have access to mobile devices. We, to date, have currently close to about 1.54 billion people in Africa, and half of those people don't have mobile devices. Let's put that into perspective. What's a half of 1.54 billion? That's close to 800 plus people who don't have access to mobile devices at this stage. It is an alarming number if you look at it. And a lot of factors to this very much contribute to the fact that there is an affordability issue in Africa. Let's look at it in terms of where we are to date. 40% of people in Africa are considered below the poverty line. So what does that mean? It means that close to about, 400 plus million people in Africa actually don't have basic necessity or access to actually basic necessity. And that is really such a big concern. And hence why, if you look at it, that's why mobile penetration and adoption in Africa has been such a slope in terms of people having access to mobile devices. And if you look at it to date, having a mobile device means a number of things. It means if I'm hungry, I can call Uber Eats. It means if I need to go to Cape Town, I can go into my app and actually book a flight for myself. I can check my emails. I can make a connection and actually connect with other people. So there's so much benefit that so many of our people in Africa, almost a half of them, don't have access to mobile devices. Now, let me shock you a bit further. If you look at the current numbers, 615 million mobile subscriptions were recorded in 2023. 615 million mobile subscription. Out of that, 515 million were very much from a sub-Saharan perspective, as well as 100 million from a North Africa point of view. So you can tell that there is quite a division in terms of, mobile subscription in Africa. Let's go a bit further in terms of the numbers. If you look at it, out of the 615 million mobile subscription, 56% of them are actually coming from feature phones. I'll say that again. 56% of the mobile subscription in Africa are coming from feature phones. And the feature phones, guys, we're thinking Nokia back in the day, that's a feature phone. So that means 46% of the smartphones, 46% of the mobile subscription are actually smartphones. 46%. What does that mean? Only 200 plus million mobile subscription in Africa. Let's look at it in terms of what's happening in the current USA. They've got 383 people in America, but they've got the highest number of mobile subscription, almost 500 million to date. If you look at it in Africa, it's very much a different picture in terms of the mobile subscription. So my topic today is really around the divide in terms of the mobile features as well as mobile smartphones, right? Meaning that we're only speaking to a quarter of the room that actually has your smartphones. Not everybody actually makes use of smartphones. And that is really the big divide at this stage. You might be asking yourself, what do we do then? What should we be focusing on in terms of building and bridging this gap? As I mentioned earlier on, affordability is one of the biggest concerns Africa-wide, right? I did raise earlier on. Currently in South Africa, we're facing one of the highest unemployment rate, 33%. That is really a big number. If you look at it from an African context, 70% of the people that live in Africa are actually younger than 30 years old. Africa is considered one of the youngest continents globally. So what does that mean for our people? It means that going forward, it's going to be really a hard ride in terms of how do we get young people geared up for financial inclusion, as well as making sure that we can actually include them within our financial spaces, getting a job, making sure that they can get into fintechs, startups, and actually building up for the future. Now, to my earlier question, what do we focus on? I'm going back to affordability drives adoption. The billion young people are not going to actually adapt to our products. We need to find ways to adapt to them. It has been raised today that firstly, mobile adoption is key, or mobile money is critical in our context. How do we build for mobile money solutions that our people can actually start adapting to? How do I easily send money from one point to the second point? Secondly, it's really going to be around, I'm still on the financial inclusion topic, right? It is very much around mobile money. Secondly, if we look at it from an African perspective, it's very much to understand that localization is very much key. How do we build solutions that people can actually relate to? Speak to me in a language that I understand, and I'll respond to you in a language that you understand. So localization, how do we actually build solutions that somebody in Swahili, somebody speaking a different language can actually easily access it and understand how do I actually navigate the system as opposed to sticking to just only a few languages that a few people actually understand. We also need to also understand how best we can bridge the financial gap or bridge the infrastructure gap at this stage. What is that infrastructure gap? We can't build solutions that are not zero-rated, specifically from a USSD wallet perspective. Secondly, around building applications that can actually utilize offline services. Because if you look at it, as I've mentioned, if our people are young and unemployed, how are they going to adapt to these solutions if we don't build solutions that are catering to that market? So that's very much key, important, and critical. one of the most touching stories that I've been a part of was understanding how people actually interact with money. In 2025, cash is still king, whether we believe it or not. Yes, in a room of professionals, we've very much adapted to the latest trends of technology. We've moved away from cash. We're now very much using our mobile devices, virtual cards, to actually facilitate payments. But for somebody taking a taxi, where the infrastructure very much still relies on cash, it is very much determined that they're going to need the physical cash in order for them to actually make their day-to-day lives a bit easy. So we need to understand how best we build solutions that can accommodate for that environment. All right. I know the picture displayed in my background doesn't reflect anything that I've mentioned. This is me publicly promoting myself. So part of my work, I do book writing. My latest book is very much focused on product, where I understand the gap at this stage is around how do we coach young people in Africa. I go back to the number, 70% of the people in Africa under the age of 30. We don't have a lot of leaders. Let's put it back into perspective. That means only close to about plus 50 million people are over the age of 30 in Africa. That is very much alarming. Not a lot of old people are coming out in Africa at this stage. In other countries, yes, there are older people. But in Africa, we're sitting with a very small number, plus 50 million people over the age of 30. I've also spent a great deal of amount of time speaking to entrepreneurs because we wanted to understand what really makes it a good entrepreneur, specifically in South Africa. How do you persevere through the hardships? How do you also make it in terms of, achieving your goals as an entrepreneur? And then the last one was mainly around how do we inspire young people to come from diverse environments to actually make it as, professionals and get to sit in such rooms like this. So now that I've articulated that, I'd like to just use the last few minutes just to open a conversation. Are there any questions that you'd like to ask for me? If no, I'm happy to go down so that we can go to lunch and actually start getting eating. Yes, sir. Please go for it.
I just wanted to ask about, you mentioned feature phones.
Yes.
And is that the future for Africa, or is data going to become cheap enough and mobile smart devices become cheap enough and widespread enough for developers and businesses to start looking at building smart apps instead of thinking about the feature aspect of it? I just want to know, what's your projection over the next 10 years? Do you think data is not just going to be something that somebody logs into once a day to check their WhatsApp messages?
Yeah. I think that's an excellent question that you're asking. And if we had to quantify it, if you look at it in terms of the automotive industry, a lot of, I don't want to sound either how, but a lot of brands that are being adapted are very much coming from China. What is the drive for that? Strictly affordability. Currently, smartphones can only be afforded by a few number of people in Africa, right? And if we can actually tackle the current challenge, how do we actually create devices that are affordable to the ordinary South African so that we can get their products to their hands? That would be the best way. But if we had to predict the future, it's quite very much concerning. Let's look at what Trump has initially done with cutting the US aid. What does that mean for African continent? It means that over the next 5 years, there may be a lot of suffering, a lot of illnesses that can't be treated because of the funds are not available to our people. So the future is not so bright, but if we do look at the current initiatives, from an asset perspective, focusing on creating more jobs, we might get into a state where we can actually start getting more people employed. Employment means I can start affording certain things. In affording that, I can probably get myself a feature phone, right? But internally, as corporates, what's the best way for us to move forward? USSD, how do we actually get it zero-rated? How do I access the money that you've sent to me without actually spending the money to access the money? In terms of apps, we know that with some smartphones, they can't actually handle the load in terms of an app that actually takes up a lot of space. Because now I have to negotiate, do I keep my pictures or do I keep this app? Let me delete the app and keep my pictures, right? So how do we create or design lightweighted solutions that an ordinary South African can actually download? If you look at, again, from an apps again, a lot of the apps are currently zero-rated. What does that mean? I don't have to have data to actually go and see my account or log into the app. So those are key important things that we need to consider in terms of us moving forward. And if we can build more on that, we might actually see a lot of people adapting to those solutions as opposed to actually paying for them. I think the term in the industry is pay as you go. That's what we need to actually adapt to. I hope that answers your question. Do we have one more question?
So you've answered my question, the question that I was going to ask. The point being that, to the question that was asked earlier on, what inclusion is, inclusion for, and I speak as a vulnerable, inclusion is really getting a smartphone and data into the Magogo sitting somewhere in rural Free State and giving them the ability to use it, including such things as language, making sure that they are able to use it means they are able to read and communicate with them. So to the suggestion of investment that was made earlier on is really about looking at private sector and government partnerships around how do you get cables in rural South Africa so that there's access to the network. How do you get phones in a safe and secure environment? How do you build the trust thing around, is it really safe for me to use this phone? Yeah. Right. So fintechs need to look at how to get that solution in there. And it means speaking to the likes of the Huawei and saying, can we get phones at a cheaper rate? Can you help us get these smartphones at a cheaper rate into these townships? Yeah. Speaking to the cell phone networks to say, can you make data cheaper? That really is inclusion. Because transformation is not inclusion. When you solve for me and you say, do me, I've got a better product for you. You're not really, you're solving for me. You're solving already for a person who has access. So to include, inclusion means access. Thanks.
Yeah. I totally agree with that statement. And I remember once upon a time, we did a project when the USSD market was still booming. And one of the question was, do we go and build ATMs in the rural areas, or do we leverage the current infrastructure in the rural areas, right? Meaning, if there's a ShopRite in the rural area, do I now go and put an ATM next to the ShopRite, or do I actually integrate with ShopRite to allow access of cash that a user has been sent, right? To your question, do we give people cheaper phones to access more services, or do we understand their current infrastructure to say, you are using a feature phone, what can I build with what you currently have so that I can actually account or accommodate for that market? And again, affordability is the issue at this stage. If more people could afford things, more people could get things. But where we are as a country, as a continent, until that is solved, until that barrier is attended to, we have a long way to go in terms of how do we actually get more smartphones into Africa. Unless somebody is willing to donate and give them to us, we have a very long way to go. Okay, one more question, and then we go and eat. I'm out of time as well, so...
Sorry, we're out of time because we've got another session before lunch.
All right. Ladies and gentlemen, thank you so much for your time and lending me your ear. Please enjoy your day.
Brian is here for the day, so do nab him during lunch or something like that, and I'm sure he'll be happy to answer your question. So thank you so much, Brian, for sharing your insights around financial inclusion. It's really not just a buzzword. Our next panel is on financial inclusion, but also on customer engagement. And we are diving into how artificial intelligence and blockchain are reshaping access to finance in emerging markets. So from DeFi opportunities to AI-powered credit scoring and customer engagement, this panel is packed with insights on how technology is unlocking new possibilities for millions of people. And we've got the perfect lineup. I see they're coming up to unpack it all. Steering this conversation is the brilliant Dr. Nceba Hene, who is the head of rewards and loyalty at Africa Bank. Alongside our powerhouse panels, I've got Nolwazi Hlope, who is the senior specialist at the FSCA for Fintech. I've also got Matthew Crow, who is the expansion head at Tether. And then I've got Ntombizethu Dlodlo, who is the head of digital strategy at Discovery Limited. Thank you so much for joining us, guys, and we look forward to hearing your insights.
Thank you very much. I'm hoping that my panel, in fact, I know that my panel is going to give us food for thought, considering that we're going to lunch. So I've got 3 esteemed guests here. And I must say, as it highlighted, is that Zethu is from Discovery. She's very passionate about the subject of financial inclusion. And also Nolwazi. She's a member of IAIC, Fintech Forum. And we've got Matt on our side. So when the word DeFi was first mentioned, it took me to my kitchen. But I quickly realized we're talking about a different ball game. So Matt, take me out of my misery. DeFi is reshaping traditional finance, but adoption remains uneven. What are the key drivers and barriers to DeFi adoption in Africa, and how can we address them?
Thank you for the question. Can you all hear me?
Yeah.
Perfect. So I think it's worth at least initially diving into what DeFi is. I'm sure everyone here has a solid understanding of that, but I'll give a very brief summary and then talk a little bit about the drivers of adoption, barriers, as well as some opportunities there. So DeFi, in its essence, is a decentralized finance, a move away from traditional centralized finance as we know it, where you have banks and kind of intermediaries who provide and facilitate financial services. In the world of DeFi, you have effectively taken all of these services, put them onto a blockchain, have those services governed by smart contracts, pieces of executable programming or code, and that effectively has created a world where you don't need as many intermediaries to facilitate certain types of financial transactions. Now, you talk and asked a bit about the opportunities or why, like where we're at and how it's being used and why it's potentially being used. So I think the first thing to note here is really that the blockchain is always working, or theoretically it should be, and it should never stop. So that provides access to a world where there's 24/7 capability for transactions to be facilitated, and that in itself is a step change from some traditional financial services, as well as the fact that there can be near real-time settlement of financial services, financial transactions, which is different from the traditional kind of realm of banking transfers taking up to 3 days in some instances. You then have increasingly lower costs to facilitate these types of transactions. So as the technology is improving, the net cost to facilitate a financial transaction on a blockchain is trending to zero, and I believe that's where it's going to likely end. Then you look at Africa, which is really a mobile-first economy, and a lot of these DeFi applications have the potential to be built on different ranges of mobile devices. Yeah, and then I think I should also mention that a lot of DeFi has been built upon stablecoin rails. So I work with Tether, who is the issuer of the largest USD stablecoin. And there's something about the familiarity of a US dollar pegged stablecoin that people across the continent understand and that they gravitate towards because it fulfills a very strong kind of need for them. So yeah, that talks to kind of the drivers of adoption. I think some of the barriers for DeFi specifically, also to address the elephant in the room, is kind of regulation. I think there is a good steps that have been made, specifically in South Africa, increasingly so in Kenya and Nigeria too. But there's still, I think, a bit of a gray area that needs to be clarified before there will be full adoption of the types of solutions that we talk about. And then, yeah, I think DeFi is also perceived as something that's really complicated to a lot of people, and that is obviously going to be a big obstacle to adoption when you think about mainstream adoption. And I have some ideas on how we could potentially address that. And then, yeah, I think working with regulators is increasingly important to create that clarity, to facilitate the types of solutions that decentralized finance can enable to better serve people on the continent.
Yeah. Matt, as we were speaking, I'm a banker. I don't know whether you want to cut me out of my job. What does it mean if you're bankers in the room? I see Zetu is also a little bit concerned. What does it mean for the banking establishment?
I definitely think that's not the intention.
Okay.
I kind of see a world where DeFi can... be careful how I say this. Where it could effectively replace or be an alternative option for traditional financial systems.
Okay.
So it's not to take people out altogether, but just to change the way in which the people and bankers are doing what they do and providing the services that they provide.
In essence, driving financial inclusion, eh?
That would be the end goal, but I think there's a long way to go.
Okay. Zeti, to yourself, AI in credit scoring and lending. Traditional credit scoring often excludes SMEs and informal business. How is AI helping to redefine risk assessment and unlock credit for underserved entrepreneurs?
Hi, everyone. Thanks for the question. I think the key thing that we need to look at, and I think the crux of the question is around data, right?
Yeah.
The quality of the data, how wide the data is.
Correct.
So if we take a step back and we look at our traditional models, to Matthew's point, that kind of stifles the traditional banks, is we're looking at statistical methods that have been used previously and a lot of judgment around that. And that's sort of the limitation around where they look at the span of data in order to inform the credit that they'll be providing, especially to the underserved community and to entrepreneurs. So what AI tends to do is that it opens up that data, right? Instead of looking at particular things, you move with agility and you understand what is out there that can be picked up, not only from the realm of outside of the individual, but also in the interactions of the individual. So for example, AI expands to your social activities, and it can look at your transactional activity versus actually preparing a financial statement, which is what we see a lot of your traditional banks are looking at. So I think the first is around the alternative data that we could look into to inform the decision to give out credit. It's very limited under traditional and could be expanded using AI if we look at that. And I think the second point that I want to raise is around the processing, which I think also Matthew touched on, right? The agility to get the information that you need in order to make a decision. And that's another thing that AI can help, right? It assists in automation and processing of that information at a rapid pace versus your traditional methods of having to put in some data parameters, and then based on that come up with an alternative or rather a conclusion of whether to give financing or not. And I think the last one is almost like a double-edged sword in terms of bias. We know that it comes through in our traditional methods based on the approaches and the models that we use. I'd like to think that AI helps in that, right? Because there's vaster, like I said to the earlier point, information that it could look into to determine whether you get the financing or not. But also the double-edged sword, right, is that it brings in its own biases as well based on the information that it's trained on. So I think it's also important as a bank or an agile bank or a bank transitioning to becoming so to look at those three aspects, right? How do we utilize data in terms of AI outside of just our traditional methods? How do we use it to automate the process to make decisions quicker so that we're able to provide the financing to those who need it? And then lastly, then, how do we reduce bias? What do we train our AI models to ensure that they're not biased? And that comes through in AI explainability, which I hope Nolwazi will touch on, and some responsible AI considerations we need to put in place in order to drive those. So I think those are some of the considerations we need to consider to serve the underdeserved in terms of them getting financing and analyzing their credit scoring.
What is always interesting is that how do you make AI more accessible and user-friendly? Because for me, I'm always looking, is there a barrier there? How do you make it accessible? And perhaps give me examples of which companies in the banking sector are making use of this.
That's a good question. I think a lot of people don't know that AI has existed since the 1950s, right? And it's just understanding how it's evolved and applied in different ways. I think the most recent example that we can use is OpenAI, which has really made it a bit more relevant as to how do I use this tool to understand how it could give benefit to me. I think the first thing when we talk about AI or any emerging technology is to understand the value that you'll be deriving from it. I think there's a lot of overestimation and underestimation of emerging technologies, but we have to take a step back and understand what is the value that it will bring. And above that, understand what the technology aims to do. So with AI specifically, what we've seen, especially in financial services around it, and specifically maybe to customer engagement, is we've seen its personalization aspect. So example, I think we've touched on it in some of the earlier conversations, M-Pesa in Kenya, as well as Nubank in Brazil, where they are utilizing AI in terms of personalization. What does that actually mean, right? I spoke about data earlier. It's able to derive a span of data relating to certain demographic and understanding it and personalizing it to the individual, but it also look at your personal interactions with it. So your transactions and what that says about you. Are you a savior? Are you saver rather? Are you a spender? And it uses that information to inform how it can give advice and how to, and I want to be sensitive around give advice because there is some regulation around that, but based on the information and the importance of human in the loop, it's able to assist at least the financial services providers information of how they can cater their products to their consumers. And we see those come through your new banks where they are personalizing it. Another important thing, a new bank that I think is interesting and helps make things a bit more relatable, something we're also experimenting with at Discovery is around multi-language support, right? I think the important thing that has been a consistent link is around education and making sure that people are aware, and most importantly in the financial services sectors, that they understand the products that you're actually delivering to them. So Nubank also does that in terms of their multi-language assistance, which is powered by AI, and also another thing that we're also exploring in terms of personal avatars and how they firstly are relatable to people and they can have conversational conversations rather, so it makes it easier to explain the products that we're delivering, increasing that awareness and education. So those are the ways and examples which we can see AI come through.
Okay, thank you. Coming from a regulatory component, Nolwazi, I'm sure people see you in varying lights. You know, some people see you as the police officer, you know, the bad cop, spoiling the party, and all of those kind of things. I'm sure you've been given many words, and perhaps you might share some of them. So from a governance perspective, with the increasing reliance on AI and data privacy concerns are growing, how can fintech companies strike a balance between personalization and data protection?
Thank you. That's a very good question. So I think as much as we're all excited about AI and its benefits that it has to offer, which are numerous, and all the efficiencies that it can bring in for fintechs, especially as they're looking to enter and grow into the financial sector, it's important that when trying to balance personalization with data privacy, that they consider several strategies around this. So firstly, fintechs, I'll just talk about fintechs, or maybe incumbents as well, can look at data anonymization, because that works through either removing PII or encrypting it to make sure that this data is not traceable to an individual. Another strategy that fintechs can incorporate is privacy by design, the principles. So what do these look like? They mean that privacy is proactive and data protection is proactive within the whole AI lifecycle, that functionality is not limited by data security and data privacy. And also they can also implement transparency requirements. So these include communicating clearly to consumers how their data is collected, used, and protected. And another aspect to consider under there is also providing consumers with either opt-in or opt-out options to make sure that they have more control of their data. So a lot of countries are already implementing similar things, especially as we know the EU AI Act speaks to that, particularly because as we look at governance in AI, data governance is very key because AI is fueled by data. And without data, there won't be any models to be able to train or test with. And so another thing that fintechs can consider in balancing this act of personalization and data privacy is conducting regular audits and AI impact assessments. This will help them identify potential risks that may arise from data privacy. And lastly, I think this is the most important thing, because at the end of the day, behind AI, there are people. And people will influence how data is cleaned or trained, what data is actually used, and how bias can be avoided, or making sure that the systems are fair and there's accountability. So I think it's very important for fintechs to foster a culture of data protection and data privacy, so that internally the teams are trained on this and they understand the importance of it, and therefore ensure that throughout the whole AI lifecycle, they incorporate these strategies, or especially privacy by design principles, as they work on personalization and data privacy. Thank you.
Yeah, I think also what is quite important is that, what is your view? Should companies self-regulate, or should the regulator come in? I know that you're part of the regulator, and how do we collaborate without being seen as colluding from a competition's perspective?
Well, I think to start off there, as the FSCA and the Prudential Authority, we're currently conducting a market study or a landscaping study into artificial intelligence in South African financial services. So we have surveyed the whole financial sector. It was a voluntary survey, and we're already seeing great insights such as the banks are the biggest users of AI and they're investing the most. And so in terms of self-regulatory practices, I think those are relevant because we see them in other countries as well, especially around crowdfunding as well. And so these could be done in collaboration with the regulators. Because as regulators, we are happy to engage with fintechs or incumbents as well. I know the perception is the regulator's door is always closed, whereas in fact within the Intergovernmental Fintech Working Group, as Keith mentioned, we engage a lot with industry players like Tether. We've engaged with them, and we encourage open discussions around these topics. So in terms of thinking about the practices, definitely it would be good to have the financial sector taking that responsibility, because one of the key things in AI, and rather ethical and responsible AI, is accountability. Thank you.
Thank you. So I think for me, what is quite important is that, Matt, you tell about your lived experiences. You know, how are you seeing what you say shaping up in the next 2 to 3 years? And what advice would you give to people in the room to say how to approach things as you see them, especially from a DeFi perspective?
So I see a world in which stablecoins continue to gain the kind of adoption and usage that they're already seeing today. And that growth rate has been quite astronomical if you look over the past kind of 5 years, not just in circulating market cap of all stablecoins, but in the number of transactions that are happening on them too, or with them. So I definitely see that trend continuing. And then you talk about the specific use cases that are facilitating that trend. So a lot of payments, peer-to-peer payments, but also kind of localized payments, Cross-border payments is a huge area with big potential for stablecoins to kind of enable a better user experience for someone looking to remit money. You see it with B2B flows also, so businesses looking to settle transactions using stablecoins instead of the traditional banking services that they have. So I see a world in where regulation is going to become a lot clearer, and where companies and individuals are going to feel a lot more comfortable, not just to use stablecoins, but like digital assets more kind of holistically. Yeah, I hope that covers it.
And Zetu, please feel free to share the secret recipe. At Discovery, what is it that you're working on, and where have you seen success? Share with us and feel free,
I'm going to put my strategic hat on here. I think it's less so about, the conversation here is around emerging technologies, right? And it's important. But I think from a strategic perspective, which is a big hat we wear, there's three aspects that I want to cover that we look at, right? So the first, I think I alluded to earlier, is sort of the underestimation and overestimation of technology and the value it brings. I think a lot of the organizations, whenever there's new emerging technology that's exciting, it's kind of the question that was asked in the previous panel discussion, right? Thank you. Am I clear now? Perfect. I think in the last panel discussion, it was sort of asked, do you want to be the first mover, or do you want to wait and sort of wait for regulation and around that? And I think, again, there is a balance to what that looks like. But I think the first step is understanding the technology versus having knowledge about it. I think we all are excited. People don't want to get left out. They don't want to be going too far ahead in case they break the system. So I think it's understanding what type of value am I unlocking on this technology, right? And the only thing that will help you in understanding the value that you can derive is understanding what the technology can bring for you. I mean, we can have conversations around the metaverse. It's still a bit confusing for me in terms of what the value it brings. But as soon as I understand how it works and how it's going to bring either a competitive advantage, encourage operational efficiency, or have an impact on user experience, then only will I interact with it, because I understand the value it can bring in those sort of pillars and dividends that it can unlock. So that's the first. I think the second is around investment and resourcing, right, into emerging technologies, the innovation of it and understanding of it. I think Akona had spoken around the space that she operates in, which is similar to mine in terms of experimentation. I think organizations need to start investing in resources that look specifically at how value can be derived in emerging technologies. From the companies that I had previously consulted with, a lot of the organization kind of want to give that job to the ops people, and the ops people are really concerned around their KPIs and how they can deliver on operations. And that's a now thing. You need a group of people that are forward-looking, that are seeing in the horizon what's next and how we can utilize those things, right? So that's the second thing. And I think the last thing is around excitement and actually taking the time to understand what that excitement is, right? The next thing after Gen AI that's been spoken around is around agents. How do we bring them in? They're autonomous. Are they scary? Is there going to be a human in the loop? How do we work around it? But again, it goes back to the principles that I defined earlier, right? Strategically, do I understand what this technology is? Do I understand the value that I'm going to be getting to it? And do I have the capacity to investigate how we can unlock this value for the organization? So that might just be the formula.
Okay. Thank you. Before I open up the questions to the floor, Nolwazi, you made reference to saying that a number of financial service companies presented to you how they're operating, and you had a look at it without telling whether a company is blue, red, or green, or whatever. Can you take us to your confidence to say, sure, but these guys are doing it well. And what is it that they're doing well, and what they can teach other people?
All right, so we've had engagements, yes, as you said, I won't name any names or any colors. But the great thing about these engagements is that we get to learn from the business or the institution itself on what's happening on the ground. So that helps us in understanding the risks as well, and being able to think about that product or that market as a whole. So like with decentralized finance, we conducted our research on decentralized finance, which is also a market study for South Africa. And we engaged with a couple of DeFi, if I can say, providers within South Africa that are offering lending and borrowing protocols, decentralized exchanges as well. And so from them, we learn and see that, okay, this is how the FSA or other regulators can respond. In tandem to that, I think this also helps us to think about how to develop agile regulatory frameworks around these examples that we see. Because without having risk-based principles, or rather risk-based approach that is outcomes-based, it will be hard to be able to engage or basically work together with the fintechs or the incumbents that we're engaging with in the economy. And I think that one thing we can learn, or rather that the fintechs have shown us as well, as we're also engaging with them for our AI study, is that they are definitely implementing a lot of fairness principles, governance principles, around accountability, around from learnings from the OECD AI principles. And so as long as we keep on engaging with them, it helps us as the regulators keep our ear to the ground, because at the end of the day, we can't say that we know everything about the specific industry, whereas we need to engage with the industry players and listen to their stories, where we've had cases of the stable coins, we've had cases of how institutions are using blockchain as well, and how that's been successfully implemented, as well as the cases that Keith sort of touched on around our regulatory sandbox, because that requires continuous engagement with the applying institution. Thank you.
Thank you very much. Open to the floor for any questions.
Thank you. Matthew, one blockchainer to another. Regulations around financial services and financial service providers are very well established. If you think about the idea of an accountable institution, key individuals, being able to submit suspicious transaction reports, having an RMCP, those rules around financial services, speaking of DeFi, decentralized finance, the whole idea about that of DeFi is that it works around that. It doesn't actually incorporate that, because there are not supposed to be any key individuals in a DeFi product. It's supposed to be autonomous, right? So given that, what is the likelihood of DeFi ever even getting off the ground?
I guess I'd argue that it has already been lifted off the ground to some extent in the kind of use cases you see around the world. People are using decentralized platforms to swap in and out of specific assets, the likes of a Uniswap, which people can go and take a token and swap it for another token. There's several other examples which are more sophisticated than that are allowing people to do this type of swapping, but with leverage or with perps. So it's a tough one. I would argue that there is already some form of meaningful adoption. But given the borderless nature of the technology, that is really where you cannot apply existing frameworks, the likes of what you've mentioned, to these types of DeFi protocols or businesses, where in many instances there's not actually one person or entity accountable for the technology. So I think it would take a lot of industry engagement to get the right regulations basically in place for that. I hope that covers most of the points.
Any other questions? Thank you very much, panelists. You've certainly given a good account of what you need to think about, and we'll go and chew over it in a meal.
Excellent.
Thank you.
Thank you so much, guys, and make sure you get your goodies to my right as you're going to settle down. It's that time of the day where we are going to break for lunch. So our lunch is going to be an hour. My watch says 13:39. Can we be back here at in an hour's time? So that makes it 20 to 3. 2. 3. 20 to 3. If we can be back here at 20 to 3 and we can continue the proceedings for the day. But otherwise, you should all have received, I believe, some tokens for lunch. If you haven't, just see the conference organizers, but you must have a token or something for lunch. Enjoy. See you in a bit.